Welcome to our Intermediate Trading Concepts series. Today we're unpacking the concept of sector analysis. This analytical approach is vital for understanding the different segments of the economy and how they interact with the financial markets. Sector analysis is key in crafting a diversified investment strategy. Sector analysis involves evaluating the economic and financial prospects of different market sectors. These sectors, like technology, healthcare, or finance, each have unique characteristics and are influenced by distinct factors. Understanding sector dynamics is crucial for investors. Different sectors react differently to economic cycles and events. For example, consumer staples might be stable during economic downturns, while technology stocks might be more volatile. During the tech boom, the technology sector outperformed the broader market, while during economic downturns, sectors like utilities or healthcare tend to be more resilient. Sector analysis can be approached through various methodologies. Fundamental analysis looks at economic indicators, sector trends, and company performance within a sector. Technical analysis focuses on price movements and patterns. Sentiment analysis gauges investor attitudes towards specific sectors. For instance, fundamental analysis might involve examining the financial health of leading companies in the energy sector, while technical analysis would look at historical price trends in that sector. An important concept in sector analysis is sector rotation, where money flows from one sector to another based on changing economic cycles. For example, during economic recoveries, sectors like consumer discretionary and industrials often perform well. Investors often use sector rotation strategies to capitalize on these economic cycles, moving capital into sectors poised for growth. In investment strategy, sector analysis is used for diversification. By investing across various sectors, investors can reduce risk and capitalize on growth opportunities in different parts of the economy. A balanced portfolio might include a mix of high-growth sectors like technology and more stable sectors like utilities or consumer staples. In summary, sector analysis is a crucial tool in an investor's arsenal. It offers insights into the health and prospects of different market segments, aiding in the creation of robust and diversified investment strategies. Exciting topics await in our Intermediate Trading Concepts series. Join us as we deepen your insights into the financial markets. Thank you for watching. Don't forget to subscribe to our channel and hit the bell icon so you never miss an update.